Alright, so let's just recap what was going on this morning and where we are in relation to everything that we covered, which was actually 5 markets. If you have a look at the Bund, we're waiting on 2 levels. It's still in the range between those 2 levels. But I am interested up here to engage at 34.69. I did say that I wanted to see it back through 63s if we get up there. And then on the downside, I'm interested in doing business long at 33.68. Neither of those have orders that are in the market because I'm going to be moving to watching the price action. So when people ask me what I'm looking at on the price action, I'm looking at the DOM, I'm looking at the footprint, and of course I'm looking at the candlestick chart when we come into an area like that. So if we do engage with that area, then obviously that will be my focus and we'll switch to it and I'll tell you what I'm seeing. But I haven't done any business in Bund today. That's not to say there's no business to do. I'm just waiting for those key higher time frame levels before locking in. Dollar Canadian, bid below, offered above. As I outlined again this morning when we made our plan, that order has been in now for several days, or those 2 orders have been in for several days. As I said, what was likely to happen here is that we were going to break this swing low and then just trade back within the range, which is exactly what we've done. And I wouldn't be surprised, as I said in the morning session, to see us close in this range today. It's faked out the upside, it's faked out the downside, and now back to near enough the middle of the range. I still think these are great trades. I'm still prepared to take them. It's just a question of when it happens that we trade into those areas. Speaking of when we trade into areas, I have now put my order in to the market on dollar yen. We spoke about this earlier and discussed this, and I said that the order's going in here with a stop above the thrust and a target of the FTA, which is this pullback high that you can see corresponds with these lows to the left. And again, the $2 Canadian orders and that dollar yen order are the only orders that are in the market for me at the moment. So on my other screen I've got my account just split between those 2 charts, and you can see dollar yen with the entry in orange, stop in red, target in green, and the same thing on the right in dollar Canadian. Obviously if it's a sell order it's orange, if it's a buy order it's blue. So I'm just waiting to see if either of those fill, but I did want to draw your attention to the fact that dollar yen has to fill really before 9 p.m. tonight. If it hasn't filled by 9 p.m, I'm probably just going to cancel the order and call it a day, because we do have a mountain of news out in the early hours of the morning tomorrow from Japan. We've got CPI, which is at half midnight UK time, and there's an interest rate statement tomorrow, and Forex Factory have listed the time as tentative. News Squawk have got the very precise time of 11 minutes past 6 UK in the morning. But suffice to say, if this hasn't filled me by 9 p.m. tonight, I'm just going to cancel the order and move on, and maybe it's sod's law that I get to my desk tomorrow and there's been a perfect reaction and it's dumped 200 pips, and if so, I will take it on the chin. I suppose the reverse is that the news could have come out and it flies through here and I'll be glad I've cancelled it. But again, I don't want to come into that kind of news with an order certainly that close to where we're trading right now. So if it doesn't fill tonight, like I say, about 9 p.m. UK, it's done for me. Could always put it back in tomorrow, but I want that news out of the way before I do that. So that's dollar yen. We did speak about BTC this morning. We said that we'd be looking to see if we pulled back here and then got above the level above, and then I would look for a long. I did say this morning I felt mildly bullish BTC, nothing major, but mildly bullish, and just wanted to see if we get a reaction that confirms my bullishness so I can essentially get on board it. And then above the swing high up here, I've got an area to engage just for a short-term reaction that we covered this morning. I haven't put that order in yet, we're still some way away from it, but that order will go in. I'm just going to put it in when we get a little bit closer, if we do. You can see the structure up here, this last low pre-break, stop above the thrust, target of the range highs, more specifically this high over to the right because it corresponds with these lows to the left. So again, not setting the world alight in terms of R, but a high probability trade that I'm just stalking if we get up there. And once more, as we discussed this morning, I filled this in my plan. So for the sell level, I've put down the price at which I want to sell at, and then the reasons why, which I said is quite important to do. So you can list the reasons why you want to get into these trades, because that might change over time. At the moment, it's fading a breakout of range highs and it's beyond ATR. But as someone asked me this morning, well, what if it's not beyond ATR in the days to come? Would you still take it? And the answer is no to that in all likelihood, because then we've lost one of the two main reasons I want to take that trade. For a mean reversion trade, of potentially trapped traders, but a pattern that I've seen so many times is we accelerate through an area like this and then straight into old lows. So if we lose ATR as a factor of confluence, I'll just wait for the next trade. You don't have to try and catch everything. But that's how it looks at the moment in BTC. And of course we might pull back here, but that remains to be seen. And then I think we finally covered oil, and I essentially said that I just wasn't interested in anything here at the moment. We spoke about this level past ATR, this last low pre-break, but I was concerned about the FTA being pretty close. So I've decided to stand aside from that and not engage with it. Someone did make the point and say that if you're using the continuous futures chart, TL1 exclamation mark, it looks very different if you're in the front month. The price will be different, but the levels should be exactly the same. So if we switch this to, let's say, November, you'll see the level there, and then that's the FTA. So level, thrust candle, FTA. It'll just be a different price point. Can I quickly show the entry again? Yeah, it looks like that in dollar yen. Looks like we got a perfect double bottom in Bunds. What's going on here, lads? Hello, hello. 33.99s. Perfect little double bottom on the hourly. Very interesting. Now, sometimes you'll get a scenario where I'll play for a run on that. I bet some of you are looking at this and thinking, oh, is he going to sell that off that last low pre-break? Stop above the thrust, go for the liquidity down here. No, you can if you want. No, that's not my play, but I have seen many times when you'll rally maybe like halfway up the range, like here, then come down and form some support, and then it will break much later in the session, and as soon as it starts to break and go for those lows, you just hit the first retest and you can get quite a nice trade. That level that we've put in is very tempting to try and get a trade into if price starts to move back towards it, so we'll keep our eye on it. Bearish engulfing in the last hour as well on Bund. It's over 1,000 offered 24. There's some big offers coming into the book here in Bund. 20s, 21s, 22s, basically racking up 1,000 at each price. You always notice it once you start going to 4 digits. Someone just asking, can I bring the ladder onto the screen? Yeah, sure. There it is. So you see the 1,087 offered 24s. I'm not glued to the ladder or the footprint when I'm trading, but there's certain things that you can see when you've studied the DOM and the interplay of orders that go through it. So you start to spot when people are accumulating, when people are potentially flipping. If I see something, I'll point it out. Right, let me get that ladder off the screen for a minute. I've got my eye on it. If something happens, I'll bring it back on. Okay, so Aussie dollar, again on the theme of this morning and the way that I map markets. We're on the weekly time frame, and the first thing that stands out is this weekly swing high that we're encountering. broken above, we're currently trading a little bit below. And then on the downside, obviously this weekly swing low, long way away from market, but it's always worth noting it out, certainly something I do. And then beyond here, the next key, swing high. So down on the daily, this was some dirty price action here, because obviously you can see the way this closed yesterday looked very bearish, and we've broken the low and then ramped up and broken the high. Now again, as I've told you before, when you're looking at a shooting star like this, you always want to mark out 2 points: the low of the shooting star, which I'm going to put in orange. Let's take those ATRs off for a minute, and the high of the day before. Those are 2 points to look at on the chart for potential trades. So when this closes out the day, which is here, and we roll into today, could you have sold the high of the day previously? Well, you could have done. It would have worked perfectly, but I wouldn't and didn't. Why? Because there's no level to lean on that's naked. But note how it trades into the high of the day previously, reacts perfectly to the downside, gets retail in underneath, then ramps, and it's off to the races, and it just takes them all out. So it's very efficient at doing that. And again, I don't know what session it was in now, but we have spoken about that before, and I told you how I would try to chunk the trade and get in at the high of the day previous on a shooting star and get out as it's going through the lows. So you'll see that same pattern. So does that mean if you see a shooting star that you should always think it's just going to run the lows and then fucking stop everybody out? No. You want to watch what it does at the lows. If it runs the lows and it starts to get back above the high of the day previous, you've now got a very good idea that everyone's trapped, and you want to start looking for it to take out the high. However, if it gets through here and it keeps going through here, we know that the low of the spike is a very good point to watch for a return to. So it's not to say that you should always assume that, oh, that's a really basic pattern and everyone's going to get fucked over. Not at all. I made a lot of money taking a go with approach on these, but you've got to wait for that low to clear and have some space on the pullback into it from below. But the best entry you can get is usually the high of the day before, because you've then got some leeway. Imagine there was a level that you could sell here and you get in at this point. When it runs the lows and doesn't go, you can put your stop, say, above this bearish engulfing. Fucking hell, that's almost break even again. But you see what I mean? You can put a stop up there and you're basically protected. If it goes, it goes. If it doesn't, it doesn't. But I always think you're better off, again, taking that chunking approach. Get in at the high of the day previous, get out as everybody's getting short, and then reassess. So the failure point is going to be that prior day's high. Once it gets above there, in all likelihood, it's going to go and take stops beyond the extreme. But again, the reason I didn't get in here is because it wasn't naked. Some of you may be thinking, oh, he's telling us a lot of stuff that he's not doing. He doesn't get in there, but he's saying you could get in there. But if you know these reaction points, you will be able to frame trades around them. I was pleased to see at least a couple of people posted to me on Twitter and said that they got the euro dollar short for the run on the open price here. And one fella told me he made 6.8 R. He was actually down on a 5 minute. He came in with that. He stalked what he thinks is the perfect setup and got a really nice move out of it. And you can see exactly what he's done there. He's used the statistics to understand that this is a high probability that it goes back to the Sunday open price. He's waited for a clear break in structure, and he's sold a rounded return to it with a stop above the thrust candle. Now, if you wanted to fault that in any way, the only thing that you could say is that is a super fucking tight stop. You're talking about a 7 pip stop when spreads widen at 10 p.m. So a little bit dangerous, but thankfully he was all right with it. Anyway, the reason I've gone off on this tangent is just to say that, as I've said so many times, you don't need to be a clone of me. Look at the principles of price and how it moves, and frame your own trades around it. That's what you do to find success. So, going back to this Aussie dollar, it's run the lows of the shooting star. taken out stops beyond the high. And another reason that you might have wanted to be careful if you were thinking about shorting that shooting star is the fact that you had almost equal highs. A very clear area for traders to get trapped and for the market to try and test, which it has now done, and it is failing again. And I would like to see how we end the day here. If it ends the day somewhere in this range, I'm not going to be really that bearish. I know you could look at this and say, well, it's SFP'd the range highs on the daily. Does this now look like it's going to go to the downside? But again, it doesn't scream out to me that it has to make a massive move down from here, even if it does SFP up here. I like to trade when I really feel that I've got the market by the balls. And for me, that would probably look like this entire up move being undone and us trading down through this low. Not necessarily today, but we could trade very close to where we opened today, maybe slightly up, slightly down, but leaving a very long rejection wick, and then tomorrow start to break these lows. Then I will feel, okay, now I've got a handle on what price wants to do. It's tried to explore the upside. It's failed. It's now breaking support lows. It's probably going to run to the next low, and I'll try and refine my entry and get in on that. As I've said quite a few times, I'm not interested in this part of the move now. It looks glamorous because if I have to short it down here, you'll be thinking, fuck me, mate, you could have got in up there. But this isn't a sure trade for me. It will look like the sure trade if it goes down here. With hindsight, you'll have gone, fuck, could have killed it. But I just want to get involved at that point when I feel that I can't lose. And I don't feel that with where price is at the moment. I can see that it looks heavy. There's no doubt that looks heavy at all. It's taken out these highs. Look at this high here, which we sat on. Have a look at the low of this candle. So we basically took out this high, and then we've got this hourly shooting star here. We break that, and we trade right up into it, and we're selling off. There's no doubt that looks heavy. But where'd you get in? Right here? Where'd you put your stop on that trade? Where might it find support on the downside? It doesn't feel like I've got it by the nuts yet. I don't know how well I'm making that point, because I know we'll all come to the table with different trading ideas, and I know a lot of momentum traders that would be like, just get in. So right now, in terms of my biases, the weekly has still got well over a day in play before I can come up with a clear bias, but it's starting to feel a little bit bearish. The daily starting to look, again, fairly bearish. It's not outright bearish, but it thrusts through the highs, the rejection. We'll have to see where it closes, but it's certainly starting to feel bearish. But this is my line in the sand. If we take that out, then I think it will come down to the next level, which is here. And I'll want to take that move from 67.42 to 66.92. So on an hourly, there's some space to play for there. So it would be break, rounded return with space, and then play it down and get out a pit beneath here. The waiting part is fun for me. Someone's saying, is it boring? No, this is the fun part. Because as I've said before, I know when I go in, I'm taking a sizable position, and I am just sitting here and I am watching and I am waiting for somebody to get caught with their pants down. And then I'm going to get my dildo out. But, you know, again, to put it in a slightly less crude light, you're looking for the market to maneuver itself into a position where you're going to take other people's money. And it has to feel right. And that's the waiting part. So dollar Canadian now really firmly back within the range. We thought we were going to get a fill down here. But no, somebody jinxed that this morning. Now we're looking at a fill up here. Nobody jinxed it, okay? I can't remember whichever cunt said that it's looking like you're going to get a fill. Totally fucked that up. So stay quiet when we get up here. I told you to break this low and come back in the range though. 4 minutes to go till the news. So just bringing that bund on, it's getting a little hung up here at these 26s. I'm not overtly sure that it's not going to run these highs, but again, as I said earlier, I've got my eye on those 33.99 lows. So what I'll typically do here is look at the nearest support to an area like this, which is coming in around the 17s. So let's mark that out. Let's put it in, say, yellow. And then if you start to get a clear breakdown through that with a thrust candle, that would be an area that I'd look at to try and come in and sell for a run on the lows. What do you recommend for learning more about price action? Sitting with me, Ledge. Sitting in here. Obviously I see things on Twitter and people point me out to things on YouTube, but I can't really recommend anyone because I've never really studied how they trade. And to be quite honest, I'm frankly very skeptical of everyone. How would I have gotten long the Aussie dollar to target the highs? It would have to have been a breakup round here and a rounded retest, which it doesn't give me. So I wouldn't have had an entry into that. How many long-term positions do I hold? I've just got a long in Bitcoin. That's it. Do you remember a while ago I posted about a lot of coins, PYR and a few others? All of those I liquidated. I just got out of all of it. I couldn't be asked for that shit anymore. So I've literally just hold BTC and that's it. Algo Rand, it's all gone. On major news days, do you pull your orders? No. What I do is, if we're trading fairly close to the level coming into the news, I will usually pull the order just on the news and then put it back in 60 seconds later. I mean, it's not a specific time window. I'm not sitting there with a fucking stopwatch. You know, sometimes it might be a couple of minutes later, but I do put it back in quite quickly. I just don't want to get caught if there is an absolutely surprise move that's way out of line with expectations. All liquidity is basically gone out of the market and it just fucking goes off the page, because that's nasty. So I'm only just pulling them very temporarily and then putting them back in. And sometimes I don't even pull them if we're trading away. I mean, euro dollar last night, I did pull it and then put it back in. Dollar CAD, I came in with both orders in. I didn't even pull them. But we were trading here last night. I could not see the possibility really of it getting to either one. I mean, I suppose it could have done, but I took a chance with dollar CAD. I didn't pull those. Let's have a look at cable then. First port of call on the weekly, the high of this hammer. Should definitely have that marked in. And then obviously the high that we've currently swing failed in this developing week here. And then the swing low. There. That is all I do on the weekly time frame, just marking out the key levels. I'm not annotating all, but that would be, you know, a WSH, weekly swing high, WSL, weekly swing low, KPI or HOH, head of hammer, whatever. Those are the key levels. So we had an SFP yesterday that hasn't gone anywhere, and a second SFP today, slightly higher. Does that look bearish? Ish. Where do I feel that it's the point of no return? Where do I feel that that's going to tank? Through here. We get through that, it's going to get nasty for cable, I think. Why? Because not only is it the lows of the last 3 days, but it is the head of the hammer. So if we lose that, it's going to be nasty. And that's where I feel you've got the market by the balls and you've got a relatively easy trade. Now, how far would you run that trade? Would you run it all the way down here? No, I wouldn't run it all the way down there. I would look for it to gravitate towards the next level. Look at this area here on the daily, which is an untested high just underneath the Friday the 13th and Monday the 16th candle. So I think the easy play will be trying to run it from approximately 57s down to 11s. So I would wait and see what we get here. Let other people see that there's an SFP and potentially try and short it, and maybe they'll be right and they'll get in up here, and that's absolutely fine. But I think the easy play, will be down here. So you'd look for a thrust candle through here, sell a return to it with space, so not the next candle, but at least one after that, and go shorter wherever the last low pre-break is with a stop beyond the thrust and a target of a pip beneath these lows here. You'll see by now how it really is a process of stalking these things and not knowing, for me, when exactly they're going to set up, because you could be looking at this and thinking, oh my god, it's another thing that we've got to fucking wait for. This is 80 pips above market. It might not even get down there tomorrow, so that rolls into next week. That's fine. You don't know when these trades are coming along. Something will be happening somewhere, because there's always something that's coming into a level somewhere. You know, you've got dollar yen not too far beneath its level at the moment. So there will be some action somewhere. Some things take longer to come to the boil than others, but you have them on your radar. Do I use monthly levels? No. I don't use 4-hourly charts either. A lot of people have told me they found success using a 4-hourly chart and trading this way, but no, I don't look at the 4-hourly. Okay, let's have a look at gold. Got questions about gold? Gold sitting here at an all-time high. There's nothing to lean on up here at all on the weekly. The first thing you've got is that to the downside, which is these highs, of course, that we broke up and out of. On the daily chart, picture's slightly more interesting, because what you've got there is you've got a little swing high that formed, then we break above it on FOMC and close as a bearish engulfing. Now, some people might be salivating at the thought of that and think, wow, it's, a very bearish looking candle. It closed as an engulfing. It took out the prior session high. It took out the swing high. It's closed beneath the low. Gold's been in an uptrend for ages now. It's got to be a great short. The problem is with something like that is I do need to see it come off some structure for me to be really convinced by it. And there is no structure up here because we're at an all-time high. So there's nothing of real interest to me in that, and that's why I wasn't saying, right, I'll get short on a rounded retest of this level with a stop above the thrust. You could have done that. You could have said, look, there's a bearish engulfing, big uptrend, maybe this is the reversal, you play it short there, well, you've stopped out. But something like that off of key structure over on the left historically would have been nice. But up here, I just feel that I don't really want to interact with it. I think I took the easy play, and yes, with hindsight, I got out early. But I took the easy play, which was understanding that we were going to break one side of this range. And, initially I tried to play it short, got out for a very small loss, and then I flipped along a little bit higher up here, caught the break, now I'm done. Until something again becomes very obvious to me. So how do I deal with price discovery? You mean when things are at all-time highs or all-time lows? I ignore them. Now, I know that doesn't sound very professional, but that is basically what I do. I just move on to something else until new structure's created. Most of the time. Unless I'm in something like the Bund, where obviously you're getting intraday structure, but from a swing trading perspective, I'll obviously keep my eye on things, but I'm going to largely not get involved from a trading perspective. So, again, with something like gold, this was a great example of what you would have seen me do in previous live sessions where I'd come in and I just wouldn't mention gold for the day. And there'd be people asking, what about gold? You're talking about bunds, you're talking about Bitcoin. What about gold, man? And now you're sort of probably getting an understanding of how I can see there's nothing there for me to do. Even if it looks like there's something there for me to do. You might look at this and think, there's a low there. Could he have possibly sold off that? If I haven't mentioned it, I've got no interest in it. So maybe today has shed some light on why that is. Also, maybe it's a little unfair of me to say if you had sold it here, you would have done your arse, because if you had sold it there with a stop above the thrust and it had pulled back to this inflection point between support and resistance and put in this hammer, would you have done your arse, or would you have got out of the way? I mean, it happened at 5 a.m., so you could have been fast asleep, but probably a little rash to say you'd have definitely done your arse if you'd sold it there. Once again, you did get a reaction. It just didn't go very far, but why would you expect it to when you have got this level here? This is why I'm always aware of these levels, especially when they're inflection points like this. You can extrapolate that back to the left and see even here, I'm drawing that very precisely, but the tiniest bit of resistance here from very late Thursday that flipped to support on the following Tuesday in the evening, that then we broke beneath, that became resistance on the Wednesday late at night again, and then if you're shorting here, you've got that level to get through. Even with the higher time frame bearish engulfing, you should be aware of that. So yes, if you see price action like this coming off the level, there's your first inkling, and there's a warning sign and you're still just on side, that you might be getting fucked. Oh, that's a very good question. Do I usually refrain from entering bund trades after 4? No, I'll do it. I will enter after 4. It's not a hard and fast rule. You're just aware that after that time it can slow down. You're usually not going to get such a quick resolution on your trades. But if there is a great level and it's after 4, yeah, I'm cracking it. I think in terms of the S&P, if you're looking here at the December front month, you're going to mark that out on a weekly, of course, and you can see that it has just taken it. But do we really want to take a position? Or do I really want to take a position until I've got more information like the daily close? No, because again, I'm looking for a swing, not a short-term move down on a lower time frame. So I'd like to see how we close. Nothing on this is leaping out at me right now. Even if we close as an SFP, if it's a partial SFP like this, where it's literally just, popped its head through here by such a small amount and then closes below, that won't really interest me. I think it's gone through that high by 2 ticks on my feed. So I'd need to see, in an ideal world, a pretty serious SFP forming here to be confident that we're going to actually really swing away from here. Now, if you come in and you mark out that high there, and then you put it back on the daily chart, you can see the point at which I would start to feel this is looking pretty bearish. If we pulled back from here, we got back below yesterday's high and we start losing this and we develop into a serious wick on a daily, then I'm thinking, okay, we've finished with the upside and we're going to explore some downside. Not this is a market top and we're going to absolutely collapse. But again, I'd start thinking about that hot potato trade. Take it when I feel that I can't lose, when everything looks right, and then pass it on to the greater fool. Which is, again, what I'm looking for in the Aussie dollar, in the cable. No idea if they'll give me what I want, but I'm looking for it. No, it's not naked. It's a line in the sand for me, though. So if we were to break through that, that's where I start to turn bearish. And then I could potentially think about, if we've closed all the way down here, coming in on a return to that level at a naked price point near to it, because there may well be one. But it doesn't feel quite right yet. So let's recap on what I'm looking for overnight, because clearly the action's all going to be the minute I close this fucking stream. So make sure you don't miss anything. So I know nobody trades bund in here, but if you do, if it breaks that yellow line and we get a strong 5-minute thrust down through that, I'm looking for the short. Using a stop beyond the thrust candle that closes through that level, using a target of 1 tick beneath these equal lows. That's how I would trade that if that sets up. Again, with the Canadian dollar, still offered above, still bid below. That will be in play certainly for the rest of tonight, all day tomorrow. I can't see any reason that that wouldn't be in there until it gets hit, unless something develops very close to one side, which would change the dynamics from a risk-reward perspective. But what you really want to see is acceleration into that area. Make sure that both those areas are still past ATR. The trade will be on. Dollar yen, don't think we're going to get a fill here. As a result of that, what I'm going to do is I'm going to pull that order, not going to pull it right now. I'll probably pull it about 9 o'clock because you just never know what could happen. But I'll pull it about 9 o'clock and then I will reinsert it once the news from Japan is out of the way, which will be probably when I get to my desk in the morning. I'll just have to see where it is. But I haven't got a firm time for that news. We've obviously got CPI at 12:30, but we've got an interest rate statement, and that's not something I want to stand in front of, especially when I don't know the exact time it's coming out. So that is in all likelihood going to get pulled, and then once that news is out of the way, I will put it back in. And then on top of that, BTC. So BTC, short up here, stop and target, outline like that. That's what I'm looking for. That must be past ATR considerably for me to want to trade that. So again, remember ATR resets every day, but as long as the level that you're selling, if you're selling the same level as me, is past ATR, that trade will likely be in for me. And on the downside, if it pulls back here and we start to see hourly bullish price action, I will look for the long. Now, what was the caveat of looking for hourly bullish price action here? Can anyone remember? Well, if you can't remember, that's okay. What happens if I can't remember? Oh, it's okay, because I've got this thing called a fucking plan that I wrote down this morning. So, key levels on the buy side, 61,373, right here. But I would need to see this back above 61,849 before engaging. It's a D1 level, that's why I want to buy, and I'm mildly bullish due to SFP rejection. Got it all planned out. Because sometimes you do get to the end of the day and you're like, what the fuck did I want to buy that for? And that happens more often than you would imagine when you're looking at 20 different markets and they're shooting around. Where to target? FTA for me. Right here. That high. It's a quick in out. Just how I like it. Hopefully we're the ones giving the in out and not receiving it. Either way, it's going to be a quick in out, because if you get bent over, it's going to be quick as well in Bitcoin. I just get used to it, because no matter how good you are going to get a little probing from time to time in your back passage. And I really think it's time to leave that there. Am I targeting the equal highs in BTC? Well, they're not equal on my feed. This high is slightly higher than that high. That's certainly a point that price could go to. Knowing me, it might just be this level above. Some of you are thinking, what? That's just under $1,000, man. What the fuck? But yeah, if I can make that work from an R perspective, I will probably get out at that next level, because this is quite a key level to me as well. Look at the resistance that we've made there, and then how we've broken above it and sat on it. That level was drawn in this morning. So look at the interplay around the level that I drew very early this morning, and that's why I do not fuck about with these levels. Alright, ledges, I think I'm out of here. Let's see if we get one of these trades that I've marked out. But just be very mindful of this dollar yen. That is in all likelihood going to get pulled. So the only time that's going to go back in is once the interest rate statement and the accompanying presser is out the way. I don't have an exact time for it. I'll be listening to the squawk in the morning. But out of everything I've called, this is the one that you've got to be mindful of, because everything else I'm planning to just keep in. Dollar Canadian and the BTC I haven't even got in yet, but I will put that in probably after this session. Alright, ledges, catch you soon.